And welcome back. In today's video, we're going to talk about whether or not you should refinance, given the fact that mortgage rates decreased to over a one-year low, the lowest rate since approximately April last year. Absolutely insane. So I'm joined by Jim Black, the man, the myth, the legend.
Good to see you. A
Welcome,
long
Jim.
time. It's been a long time on video. I'm glad we're back and hope everyone's having a great summer.
Yeah, absolutely. We've used to do live streams. Gosh, we have to go back to doing that. Travel during the holidays, during the summer months makes it a little bit more challenging though. But yeah, I want to bring Jim on because Jim's been a licensed loan officer for about 20 plus years. I've been a licensed loan officer for about 6 months. So I want to bring him on because he has a lot of expertise regarding this. And of course, rates decreased to around 6.5, 6.4%, the lowest rate since April last year. It's absolutely insane. This is actually one of the biggest decreases in the past 1 month, down by about 75 basis points compared to 1 month ago. So if you bought a house when rates were at 8%, maybe you have a HELOC you want to pay off, you have credit card balances, or you have an adjustable rate mortgage, then this video is actually for you. We're going to talk about ways to evaluate whether or not refinancing is right for you or not.
Well, thank you so much, Jason. And the first thing you want to do whenever you're thinking about financing, it does not matter what rates out there or what programs out there. It's all about your objectives and your time frames for your goals. So if you're going to sell your property in the next 1 to 2 years, it's probably worth doing nothing unless it can be done at no cost and if you can have instant reward for that savings. So be aware again that there are all these rates out there, all these programs. We have to first think about your goals and make sure that everything aligns with that. So I just always like to start there because that should help people set the mood for what their goals are, to think about how long it takes to save money versus spend money to get that savings.
Yeah, absolutely. And I should also say too that I actually used your services to refinance back in 2021, I think it was. And so, yeah, you were my loan officer back, 2 years. What was it? Gosh, yeah, 3 years ago already. Crazy.
Yeah, I'm sorry you got a bad rate. You got a horrible rate, I think.
Yeah, 2.6%, 30-year fix. I mean, geez. So yeah, absolutely amazing. So thank you for that. And so it'd be great to kind of talk about, what I did and what you recommended back then, and also what you're doing for clients right now regarding, whether or not it makes sense to do a refinance and what is your break-even point as well, which is something I did because I was looking at, okay, I'm not going to be moving for a long time. Potentially that was the goal. And because of that, I was looking for the long-term time horizon. If I were to refinance, how long would it take for me to basically break even after paying the closing costs for doing a refi? So maybe you can kind of touch on that just really briefly here, Jim.
Absolutely. So again, what you want to look at is you have to look at your total cost to borrow money today. So if you have one loan, it's pretty easy. It's the current interest rate. If you have two loans, you have to understand that there's a blended rate that you're borrowing. So for example, if you have a very small first loan at 2%, but you have a very large second loan at 9%, that rate's probably going to be closer to 7%. So first thing you do is evaluate what your cost to currently borrow is. We have great calculators you can use for free to determine that. Once you know that rate, you can then look at cost or no cost options to refinance. When you look at cost options, you are looking at how much savings you can have relative to the cost to refinance. Those costs are normally known as closing costs. Closing costs can be put into the loan amount so that you don't have to bring those out of pocket. So for example, let's say it costs $10,000 to save $1,000 a month. Jason, what would that break even be in months?
10 months.
10 months. So if I had a long-term horizon, that makes a whole lot of sense to refinance because I'm saving money at month number 11. Well, what if that $10,000 cost only saves me $100 a month? That break even is now 100 months or about 9+ years. So you want to look at the difference in those costs versus savings. And what's most important, again, is your goals. If you're in the military and you move every 3 or 4 years, you want to do a no-cost VA interest rate reduction loan, known as an IRRRL. You want to basically do something at lower cost because you need to have more savings sooner than in the long run because your horizon's only 4 or 5 years. So you really want to think about that approach when you're looking at the break even of cost versus savings.
Well, can you talk about that real quick? Like, so the cost versus no cost. Like, I understand like there's closing costs usually associated with doing a refi. You can pay that out of pocket, or you can just add that to your loan balance, right? When you refinance. So can you just briefly kind of talk about, cost versus no costs, the pros and cons of doing that?
Absolutely. Costs basically help drive the interest rate lower. Banks are in the money of making interest. So they know that the lower your interest rate, the less amount of overall interest they're going to make for the life of the loan. So they're going to charge you more discount points or origination points to buy that rate lower. They are offsetting future interest gains to give you value and benefit today. That means that your closing costs are transactional costs that are non-reoccurring closing costs. They're a one-time transaction fee that you can either pay out of pocket or you can have rolled into the new loan amount. So for example, if it costs $10,000 and my current payoff was $300,000, my new loan balance would be $310,000, and I would not have those costs be taken out of my own bank account. They would be rolled into the loan amount.
Yeah. Right. Okay. That's what you mean by cost versus no cost. Cost meaning you pay it out of pocket. No cost meaning you roll it into the loan balance.
No, I mean no cost means zero transactional costs.
I
So
see.
that
Sorry.
means
Yeah.
that you're getting a free loan. If you have a balance of $300,000, that means your new loan is $300,000 and the lender is covering the costs. When the lender covers the
So you get a
costs,
higher rate. Yeah.
that means it's a higher rate because they're saying we will forgive interest today for a higher interest rate for you for the long run. So you as a consumer need to evaluate the cost versus no cost to determine if that difference in savings is worth paying for or not paying for. And that's the
Right.
break-even analysis.
Yeah. Right. Okay. Makes sense. So someone should look at their current payment today, which would be your principal and interest, because your property taxes and insurance will not change if you refinance, which is important because when you refinance, the tax collector doesn't reassess your value of your property. So just looking at your principal and interest payment today, and then looking at the new principal and interest payment and whether or not there's any cost involved in that as well.
And we're located in California, Jason. Obviously, we do loans in California and a few other states. Reach out to us if you want to learn more about that. But be aware, every state assesses properties differently. So in California, for sure, we would be wanting to look at the principal and interest payment versus the new principal and interest payment to see the savings difference.
Yeah, right.
And
then
by the way, there's two differences in savings people aren't aware of. There's an interest savings and a payment savings. So would you like me to break that down a little bit, or is that too?
yeah,
much?
absolutely. Because
Okay.
it's important to note that because people could have different variations in their term and then how long they've had their current loan as well.
So one thing we know for sure in a principal and interest loan, no matter what loan you get, there's going to be a principal part of your payment and an interest part of the payment. As you get towards the end of your loan in the amortization schedule, the overall interest payment is going lower and the principal payment is going higher. So what you need to be aware of when you look at the calculation of how much you're saving is you look at it from a principal and interest payment to principal and interest payment. That is the true way of seeing the cash flow difference in your monthly payment. The other approach is to purely look at the interest savings, not calculating in the principal payment, but just saying, if I have a loan for $400,000 and I'm saving 1% a year, that means I'm saving $4,000 a year in my interest, or divided by 12, $300 and some change. So that's the other way of looking at how much you're saving. The savings of interest is going to be normally lower than the savings of the overall, the interest savings is going to be higher than the overall savings of the principal and interest payment. So it's just good to look at it a few different ways. And Jason, what do you recommend for a time horizon for someone to want to refinance when they're looking at the break even in terms of months? How far out do you think they should be able to recuperate their money?
Yeah, I think it's probably a personal decision, right?
Yep,
And
exactly.
so
But
it kind of
what's
goes
your
back
thought?
to goals like you talked about at the very beginning of this video, right? Do you have plans to own your home for at least 10 plus years, or may you potentially move in 5 years? And so that is going to vary by the depending on the person. In my scenario, I was thinking, gosh, I'm probably never going to be moving from this house. And so my time horizons are like 30 years. Who knows, right? So I would say if you have long term time horizons like me, I would say probably 10 years would be a safe bet that you probably will not move. But for a break even point, for me, because I had these long term time horizons, I think I wanted to look at like a 5 year period, 3 to 5 years that I want to break even because potentially I could move sooner. I don't want to move, 1 year after doing a refi, paying closing costs for that, and basically losing money, right? So it kind of goes back to your goals. But yeah, what's your recommendation for people?
I like 2 to 3 years maximum in terms of getting that savings. Again, life events can happen. Things can happen in your life, good and bad.
Yeah.
So I think that recuperating period needs to be less than 3 years. And a lot of the lenders, the Fannie Mae, Freddie Mac, and Ginnie Mae, which is conventional lending and VA and FHA lending, they have a requirement known as a net tangible benefit when you refinance. That means that it needs to make sense for you to recuperate your costs within a certain period of time. The maximum time frame for that recuperation is 36 months or 3 years on some of the programs.
Oh wow.
So
Okay.
again, they won't let you refinance unless there is a savings on payment, a change to a lower term, a extenuating circumstance, maybe you take cash out, other reasons for that. But if you're doing a rate and term refinance, which means paying off the balance to a new rate and term refinance, that break even has to be less than 36 months.
So is this all part of the Dodd-Frank Act that was enacted back in 2010 to kind of protect consumers?
Yeah, a lot of these things have come up from bad actors. A lot of retail bank loan officers were churning the database that they had. And so,
Mhm.
yes, a lot of people did not have a net tangible benefit savings. They were actually being put in a worse loan and sometimes with large prepayment penalties. So,
Yeah.
fortunately, prepayment penalties are gone, but these bad actors really didn't do any justice for their consumers and the clients because they were just churning their own pocketbook and they were actually making more than the bank. They were making more than the savings for that client, probably over the life of the loan. So
Yeah.
there are no prepayment penalties in today's world, thank God. But work with a reputable lender who has been doing loans for a long time, creates a custom plan for you, because again, we all have different goals. So it's not a one size fits all program. And
Yeah.
that's what I love about being in our position here at Revest Homes. We have the ability to customize 4,000 different loans from over 50 different investors. So we're lucky to have creativity on our side. And right now, today is Friday, August 2nd, 2024, rates are going down pretty dramatically. So a lot of our lenders are competing for business by offering better discounts. So we're able to capture that for our clients, which is great.
Right, absolutely. I think that's actually one of the reasons why, well, obviously we've been like great friends for since like 8th grade, but there's that. But also when I was shopping around for refis, it was great that you were able to shop those different lenders for me to get the best rate. So that was fantastic. And so using a broker is really, really
Yeah, and
good.
let's talk about a market move. Let's say you lock in interest rates, which means that's when the lender guarantees your rate for a certain transaction period of time to close. Let's say rates were to go down 0.5% more during that transaction.
Yeah,
We're
they've
lucky
gone
to
down
have
what, like a 0.5% in like a past week or something, right?
Yeah,
I think. Yeah.
we're lucky to have what's called an interest rate guarantee program, and it's known as a rate renegotiation. So if rates drop in your transaction period before you close, you're able to get a one-time free float down as long as that difference in interest rate is normally 0.25% or higher. So if
Mm,
you were locked in 2 weeks ago under a conventional loan, you have probably the ability to get a better rate. If you don't, give us a call. We can do that too. So
yeah.
just know we have that ability. And that gives people peace of mind to make sure that they aren't waiting
Oh
for
yeah.
the absolute
Oh yeah.
low. They can feel
Yeah.
good that they're saving they know what they're going to save, and they could potentially save even more money. So that's what I love
That's
about that.
fantastic. Because yeah, I remember when I was trying to lock in my rate, I was like, "Gosh, are rates going to go lower? Am I locking in the right time?" And today alone, on the Mortgage News Daily, they're down by 22 basis points alone. So that swing in just one single day could almost allow you to enact a lower rate based on Revest Homes
Yeah,
program you're
and
talking
most
about.
and most big lenders don't let you do that. So that a
Yeah,
lot
for
of big
sure.
lenders, because they have to, why banks don't like doing that is because they have to hedge their trading desk off of these forward future locks.
Mhm.
Locks are a future commitment to lend.
Yep.
Well, if rates go lower, those locks either get canceled or expire or get renegotiated. So we're very lucky to be flexible and nimble to the market conditions, and that's why you should work truly with a mortgage banker or broker in your area, broker, not banker, because they'll have the tools that you need to adapt and shift and save you money. And
Yeah.
again, they can do loans faster and cheaper because they're all independently owned and they have their own efficient ways to run an operation.
Yeah, I mean, it's much better just to submit one loan application, have your loan officer shop for the best rate for you, rather than like submitting like 15 applications across
Yeah,
the internet to figure out what's the best rate. Yeah,
because the biggest difference with that approach, if you come to us, for example, we
credit
pull
for
your
me.
credit one time, that's good for either 60 or 90 days with any lender we work with. If you were to
Yeah,
take that approach and go work with the large banks individually, your score would go down 100 points.
yeah,
So we only pull your credit one time, and that works for any of the lenders we work with, which is a beautiful thing. So,
it
and
is.
also, let's say there's the product that comes out mid transaction and it's way better. We can take the appraisal that's been done with one lender and shift it to the other. So we have the flexibility to basically port a
Mm.
total loan package to another lender if we need to midstream if there's a
Wait.
compelling
So you're
reason.
saying if someone's in contract, let's just say to buy a house, they have an appraisal done, or even if they're doing a refi, and you're saying that if that buyer homeowner decides to go with reaches out to you and wants to do a refi or purchase for you, basically switching lenders, you're saying that Revest can use that appraisal from the previous transaction? They
Yep, as
pay.
long as it was
Wow,
ordered
that's
through
crazy. Okay.
yeah, as long as it's ordered through a lender and done by a appraisal management company, perfectly fine to do. So that happens
Wow.
also sometimes. So
Because that would save a
some
lot of time, because if you have to order a new, I mean, that's like the worst thing, right? If I'm representing a seller and the buyer says, "Oh, I want to change lenders," and you're like halfway through, you're like, "Oh my gosh, seriously!" Like you have to order the appraisal, and it's going to take like 2 weeks or whatever, and you have to go through underwriting and stuff. So that's fantastic. You're able to use
yeah.
the other
And
appraisal
more
tools.
importantly, sometimes we don't even have to get an appraisal. So a lot of times on a
It's not that crazy.
refinance, the data is already there, right? If the
Yeah.
data was done in the last 5 to 8 years, these government entities, Fannie and Freddie Mac, have
Yeah.
these documents. They already have an appraisal. So chances are good if you're lowering the risk, right? If you're just lowering the interest rate, that payment's going lower. That means the risk for the lender's lower.
Mhm.
So that should be an offsetting factor why you don't need to spend $700 on an appraisal.
Yep.
Which brings me up to my next point. We're
No,
doing
I didn't have to
something here.
pay for an appraisal when I refinance with you
Yeah,
too. So
exactly.
I love that.
Exactly.
Yeah.
We're actually doing something also throughout our entire company. There are no appraisal fees till the end of the third quarter of 2024. So that's kind of a nice feature too. So that's for conventional refinances and conventional purchases. We're just covering that expense to say thank you. And that special started ironically today. So just another way
Okay.
that we can kind of reach out and make a difference. And again, we want to work in the best interest of the consumer because that's how we get referrals. That's how we get other people to help. We are not working for the interest of the bank. The bank is our partner. We're going to do our best job to be compliant, follow the regulations, but we're also going to make sure that our client gets the best white glove service with the best options and pricing and customized solution.
It's awesome. All right. Anything else you want to add, Jim? I think this is really great, because I just saw, gosh, rates went down so much that there's has to be some people who are looking to refinance, and I just want to give them the right information. They can make
Yeah,
their own informed decision
getting
about. Yeah, good.
Yeah, getting quotes is free. It takes about 5 minutes of time. Jason can put the link on how to do that in our video. But this is truly a really smart time to do this. It's a free call. It's 5 minutes of your time. Reach out to us. We'd be happy to look at your situation in the states that we're licensed in, obviously. So we'll make sure we put that in the chat too, or in the
I'll put in the video
video.
description. Yeah.
Yeah, just make sure you know what states we're licensed in, because we are not licensed in every state, unfortunately. So,
Yeah.
but thanks for your time, Jason. And again, this is a golden opportunity. If you bought a house in the last 8 months to 2 years, congratulations. You just got a little bit of a increase in savings, and we'd be honored to be a resource for you.
Awesome. Yeah, Jim, thank you so much. And everyone watching today's video, we'll provide a link in the video description below for that. And everyone, thank you so much for watching today's video. Please like and subscribe, and we'll see you in the next video. Have an amazing day.